Ladies and gentlemen, good day and welcome to Kolte Patil Developers Limited Q3 and 9-month FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Smith Shah from Adfactors. Thank you, and over to you, sir.
Thank you, Ria. Good afternoon, everyone, and thank you for joining us on the Q3 and 9 FY24 results conference call of Kolte Patil Developers Limited. We have with us today Mr. Rahul Talele, Group CEO, and Ms. Dipti Rajput, Vice President, Investor Relations. Before we begin, I would like to state that some of the statements in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in Q3 and 9 FY24 results presentation that has been shared to you earlier. I would now like to hand over the call to Mr. Rahul Talele to begin the proceedings. Over to you, sir.
Thank you, Smith. Good afternoon and a very warm welcome to everyone present on this call. Thank you for joining us today to discuss the operating and financial performance of Kolte Patil Developers Limited for Q3 and 9 months FY24. I would like to begin by sharing with you our views on the real estate environment, followed by an overview of key developments of the quarter. After my comments, Dipti will take you through the key financial highlights. We then look forward to an interactive session with participants where we will take your questions and suggestions on today's call. Let me begin by talking about the broader economy and the real estate market, along with our outlook on the key markets that we operate in. Over the past few years, India has undergone a transformative journey marked by a substantial increase in the value of financial and physical assets. This economic evolution has not only generated wealth, but has also positioned India as a stable market for products and services, presenting an attractive destination for business seeking long-term growth prospects. The structural reforms and investment implemented in recent years have played a pivotal role in shaping India's economic narrative. Notably, the real estate sector, a key indicator of economic vitality, has displayed resilience with increased sales volumes across key demand markets and segments. Even in the face of rising mortgage rates increasing by over 200 basis points from the lows of 2021, the sector has seen expansion in property values, emphasizing the robustness of demand in the housing cycle. Stabilizing interest rates will further improve affordability criteria. This also showcases the intrinsic need for people to own their homes, supported by an expanding affordability paradigm. A significant driver of this growth has been government policies and legislation, with schemes that support affordable housing gaining prominence, while some of these schemes, including interest subsidies, can further boost demand. In the midst of this economic landscape, we have strategically positioned ourselves to capitalize on the burgeoning opportunities. We have been delivering progressively expanding operating milestones over the last few years and are continuing the momentum in FY24. Positive visibility emanates from sustained customer traction across projects. During the year to date, we have launched 4 million sq ft and another 2 million sq ft is in the pipeline for the remainder of the year. With a diverse customer-centric portfolio covering mid-income and luxury segments, Capital has recognized and catered to customer expectations, building trust and confidence in its brand. For the first 9 months of fiscal year 2024, we registered new area sales of 2.89 million sq ft with an aggregate value of rupees 2079 crore, reflecting a significant year-on-year increase of 26% and 36% respectively. Collections from customers during the 9 months expanded by 13% to rupees 1,478 crores, providing liquidity for project execution. I'm pleased to announce that we have recently acquired 2 new projects in MMR region with an aggregate top-line potential of rupees 545 crores, further boosting our business development initiatives in Mumbai. With this, during FY24 to date, we have acquired projects with a top-line potential of about rupees 4,000 crores, of which our Mumbai business development stands at about rupees 2,700 crores. This strategically positions KPTL for sustained growth and solidifies its position as one of the key players in metropolitan areas. Looking ahead, we are confident in meeting our pre-sales guidance of rupees 2,800 crores for the fiscal year 2024. The company's vision extends beyond immediate targets, aiming to close another record-breaking year that surpasses all previous operating benchmarks in terms of sales, realizations, and collections. We are confident of achieving our business objectives on the back of enhanced contribution from existing projects, a robust pipeline of new launches to the tune of 8 million sq ft valued at rupees 7,000 crores for FY25, which is a part of a strong project portfolio of rupees 25,000 crores. With regard to deliveries for the year, we are confident of closing the year with the revenues of around 1,500 crores. Margins for the quarter have been impacted on 3 counts. Low revenue recognition based on delivery. Gross margins are lower owing to the revenues realized for the certain low margin projects. Finance costs include the provisioning for repayment against the funds received from the project-specific financial partners. The broader industry trend of consolidation and formalization further supports KPTL's trajectory. As the real estate sector witnesses a shift towards quality developers, buyers and landowners are increasingly turning to reputed brands. KPTL, with its strong market position and customer relationships, is well positioned to deliver value across the entire ecosystem of stakeholders. Thank you. I request Dipti Rajput to share the financial highlights.
Thank you, Rahul. Good afternoon, everyone. I will now briefly take you through our financial performance for the third quarter and 9 months ended 31st December 2023. Based on PCM-based accounting, we clocked revenues of rupees 845 crore for 9-month period and rupees 75.8 crore for Q3 FY24. EBITDA for 9 months stood at rupees 58 crore, PAT stood at a negative 42 crore during 9 months FY24. Here we would like to remind you that recognition of revenue and profits are dependent on the timing of project completion based on statutory accounting guidelines. Our net debt stood at a negative rupees 32 crore as on December 31, 2023, and the operating cash flows for 9 months FY24 stood at rupees 269 crore. This positions us with ample capability to expand our ambitions for future growth. As we foresee gathering increased momentum across projects and achieving further milestones, we are assured in the value we deliver to the customers and the corresponding advantages expected to reach all our stakeholders. On that note, I conclude my opening remarks and would now like to ask the moderator to open the line for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 questions per participant. Should you have a follow-up question, we request you to rejoin the queue. The first question is from the line of Viraj Mohata from Equirus PMC. Please go ahead.
Yeah, hi sir. My first question I wanted to ask is, if you can throw a little bit of light on the BD pipeline. You mentioned you have launched 4 million sq ft and you are planning to launch 2 more million sq ft this year. What does the BD pipeline look for next year?
Hi, Raj. So we are confident. So there are multiple projects which are in an advanced level of BD closures across Pune and Mumbai. So certainly considering that, we can consider a strong BD closures in the coming few quarters. So having said that, around 6 to 8,000 crores of BD closures we are expecting in next financial year. And on top of that, currently we are sitting with, we have already done 3,200 crores of launches in the first 9 months. In this quarter, we are planning to launch around 1,800 crores worth project. And in next financial year, on top of that, we are planning to launch 7,000 crores worth projects. For that, the business development is already been done. So we are strong in terms of the launch pipeline, at least for next 4 to 6 quarters.
Right. And my second question is, if with such a strong launch pipeline of, let's say, 1,800 crores in Q4 and close to 7,000 crores you mentioned next year, so close to 8,000-9,000 crores that you will launch next year, should we expect significant ramp up in our pre-sales considering the newer projects are much faster in the early stage?
Yes. So we are expecting a 25% CAGR growth in terms of pre-sales number for the next financial year. But it will be too early to comment beyond that, and we are confident of achieving that kind of numbers. And simultaneously, we are confident of launching this kind of inventory also in the next year. So our endeavor, along with the volume, our endeavor is to, go for the better price realization so that the margins for the, these ongoing projects will be better. So it will be a, conscious call between volume and value, and accordingly, will push our pre-sales number.
What will be the realization growth this quarter over last quarter, both in LR? And LR obviously was much lower portion this quarter, if in your press release what you have written. So what was realization growth in LR, and why were LR sales much lower this quarter compared to the first 2 quarters? And what was, and obviously I understand the combined realization was much higher because of because of the 2 projects that we launched in Pune. But in general, like to like basis, what's the realization growth for our company in LR and non-LR?
So, again, a realization is a function of which project is contributing in that specific quarter. So it will be difficult to predict a quarter-on-quarter basis realization, but on an annualized basis, realization we are expecting for next year around 10% improvement as compared to the ongoing financial year is what we are targeting. And on top of that, how quickly we can launch our Mumbai projects, that will be, so that will be, more than 10% because the Mumbai, the per square foot realization is pretty high as compared to Pune projects. So if we launch those projects, if we consider those projects, then certainly we are confident of reaching somewhere around 7,500 to 8,000 in terms of per square foot realization. To answer in terms of the LR, so it was a journey of 4,800 500 rupees square feet 2 years back to now around 6,400 rupees square feet. And recently launched 2 sectors where we are, planning to launch at around 6,500, so which are planning to get launched in this quarter itself. So, and we are planning to launch one luxury segment sector in LR with a price realization during a launch price realization of around 7,000 crores. For that, pre-sales number will start coming in from Q1 of next financial year. So we are confident of, we have taken up multiple price hikes at LR. So we have classified our LR inventory into a historical inventory, and the whatever that we have launched on new sectors in last 2 years. So in whatever that we have launched in last 2 years, there is a significant betterment from around 15 to 20% price hike. It's been seen in last 4 to 6 quarters.
Got it. Just last question, and more accounting. So your net debt, you mentioned is net.
Mr. Viraj, I'm so sorry to interrupt. Could you please return to the question queue for the follow-up question?
Sure. Sure.
Thank you so much. The next question is from the line of Concall from HDFC Securities. Please go ahead.
Yeah, hi Rahul. Congratulations on a decent performance, especially on the pre-sales side and business development. Sir, I missed this number. So what is the Q4 for the rest of the year? How much is the business development you are targeting?
Sorry, Parikshit, can you please repeat the question?
For the rest of the financial year, how much is the business development you're targeting?
Mr. Prakshit, your line is not clear. We're not able to hear you clearly.
Hello, is it better now? Hello?
Okay, a
Hello.
little better. Yes.
Yeah, so Rahul is asking how much is the balance for the balance financial year Q4? How much is the business development you're targeting?
See, Parikshit, around 8 to 10,000 crores worth projects are in a very advanced stages of discussion. But as we discussed earlier through earnings call, so we are very conscious while closing the business development opportunity. So till the time we don't, get through our due diligence process, so we are not in a hurry to launch, declare that project or achieve the closure. The legal closure for those specific project. Having said that, yes, certainly, in next 3 to 4 months, around 3 to 4,000 crores worth project will get, closed.
And if you can help give us breakup on the Bangalore piece, so we've not been adding projects there. I mean, I think Raga is one project which has been a legacy project. So how do you look at Bangalore in terms of growth and business development? Because we have been operating there for many years now, but in the size and the scale of the company, it has been lagging a lot.
So, for the balance of this financial year, the BD closures will happen at Pune. And there are a couple of opportunities which are at the advanced stage of discussion at Bangalore as well. And having said that, we are launching one project. So RERA is already applied, and we are expecting a RERA certification in next 10 to 15 days. That project will get launched at Bangalore. The name of the project is Raga. It is the last phase of our ongoing project. And yes, certainly, we are giving attention to Bangalore as a geography, and in next financial year, you can see, couple of closures in Bangalore as well.
So out of this 10,000 crores of active discussions on the BD, how much would be the split between Pune, Bombay and Bangalore?
So Pune will be around 70% Pune, around 20% Mumbai, and rest 10% Bangalore. These are very, approximate numbers.
Got it. And this is the last question, Rahul. In the presentation, we have been seeing this land parcels, been there for companies for more than 10 years now. This on Kalyani Nagar and Boat Club Road, which is like value-wise premium housing and luxury housing can be done. So what's the view here? When do you expect to launch these projects? They've been sitting in our land bank for quite some time now.
So out of these land bank projects, if you've seen the downtown project, we have moved to our priority launches. Likewise, the Gotaude project, which is around 80 acre of land parcel. So we are waiting for a DP of PMRD to get sanctioned. Once that DP gets sanctioned, so it is a very massive development on lines of Life Republic. We can have a project over there. So that is again in the west part of Pune. So we are waiting for a DP to get published for this Gotaude project, and there are certain the compliances things that we are addressing. So post that project can be from a launch perspective. In terms of the Boat Club, since it is a very prime land parcel, Boat Club and Kalyani Nagar, we are assessing what kind of the product that we can offer over there. So and we are evaluating whether to go for commercial or residential kind of portfolio. So we are taking a conscious call to wait and watch at least for next couple of quarters before we launch Boat Club and Kalyani Nagar, where we have a good amount of clarity in terms of the legal and other things.
Okay. Thank you, Rahul, and wish you the best.
Thank you so much. The next question is from the line of Bharat Seth from Quest Investment Advisors Private Limited. Please go ahead.
Hi, Rahul. Thanks for the opportunity and congratulations. Hello?
Yes,
Hello?
Bharat.
See, I will now taking forward to previous participant question on Kalyani Nagar and Boat Club, whether we go for residential or commercial, we are evaluating. So could it be, can you give, if at all we go for commercial, then it will be outright sales or annuity project you would like to develop?
So see, we are currently, as I communicated earlier, we are assessing whether to go for a strata sale or whether to go for some kind of the commercial portfolio. But it is too early to comment on that. So it is just a assessment that we are doing internally. See, there are many multiple things are happening. Even the super prime luxury residential properties are getting good traction. So we are evaluating on those lines.
Okay. And second, I mean, normally our traction is that showing that 50% of minimum, pre-sales booking at the time of launch only. So, Rahul, just to get sense, when we are talking of, say now around 1,800-1,900 crore launch on Q4 and plus some sales from the unsold inventory. So why we are still restricting our guidance to 2,800 crore? Is it fair to assume that it can shoot up, go above, 3,000 crore? What are the possibilities?
See, I would like to share an example of our Baner project, which got launched around 8,500 and upper level inventory at around 9,000 rupees square feet. Now, since we are launching the subsequent phases of that project, we have improved our prices significantly, and we are, commanding prices beyond 10,000 for the upper floors in that specific project. So, this kind of strategy varies from project to project, where we are sitting with a limited kind of inventory, where we want to achieve a better and better price realization. And in case of the mass volume project like a Life Republic or any mid size project, mid ticket size project, our endeavor is to achieve a good volumes so that there is enough new inventory that can be launched very quickly. So it is a judicious call that we are taking. And to answer your question in terms of guidance, as we speak, we are confident of achieving 2,800 crores. But yes, certainly there can be a possibility of positive surprises.
And coming again, back to say my question. Sorry, I'm connected with that. Next year we are okay.
Could you please return to the question queue, as there are several participants waiting?
Okay, fair.
Thank you. The next question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Hi, sir. Thanks for the opportunity. So first question is on the execution side. While we're talking about big numbers on sales and scaling up our business to do a lot more. On the execution side, how are you preparing your organization to take up at least 1.5 or 2x of projects versus what we were doing earlier? Probably not just for you, but from the industry perspective also, if you can say. And what are the key monitorables? Like how easily can an organization scale up to take up more projects, and what would be the key monitorable in terms of the team size, etc. So just your comments on that.
Thanks, Pritesh. Interesting question. So, see, sale is an event. We call in a real estate, sale is an event. It is a one-time process, one-time event. But construction is the process. It is a journey of 2 to 4 years, depending on the project size and the height of the project. So, over there, from a industry perspective, since everybody is achieving a good sales number, so most importantly, there can be a possibility of some kind of the risk element in terms of the labor and in terms of the supply of the material. So labor, so to address the labor, so we are moving towards the LU form. So most of our projects are through formwork technology that reduces our dependency on the labor significantly. Second is in terms of the procurement, since we go with the long range contracts with the company, so we have a very limited deviations in terms of deliveries of our material, and that is what we have seen in last 2-3 years, though the industry were struggling in terms of the procuring the material, but because of our strategy, that was very helpful. So just in order to give you an example, we don't order a lift below say 50, 70 count. Our lift ordering value and count will be more than 100 units or 80 units. So that is how we operate at the company level. And in terms of scaling up the business, we have nurtured the relationship with the contractors. So we are in the industry since last 30 years, and there are many such contractors who are working with us since last couple of decades. So we give our most of the contracts on labor and material basis. So material is centrally procured by us, and that is kind of a free supply to our contractors. So mostly we are relying on the labor contractors, and these labor contractors, there is a supervision. So supervision team is completely in-house, whereas the sourcing and the labor, the coordination is only outsourced. So this is well proven within the company. And in terms of the scalability, so we were talking about, though we were achieving a sale of say 1,500 crores 3 years back, so motamoti 3 million square feet, and now we are achieving a sale of say 4 million square feet. So though the value is going up significantly, but not the volume. So volume is going by, because per square foot realization has also gone up significantly. So considering that, we are ready to take the challenge of even a 1.5x, 2x of volume, and we are completely ready. So if you visit most of our sites, we are achieving a 10 to 12 day cycle across the projects, and that is prominent. And that is one of the good parameters that we are tracking, and which is most of the cash flows are linked to that parameter. And we have not seen any kind of delays in our RERA projects, so RERA guidelines. So we are confident on achieving the scalability through our internal teams and through our the external stakeholders in the form of contractors.
Got it. That's quite detailed and very helpful. Second question on, since we are already halfway through the quarter, how confident are you in terms of bringing all those 1,900 crore of launches, in this quarter? Obviously, few of them are probably already launched, you have highlighted, but for rest of them, any spillover you expect, or you are pretty much confident of launching all of those in this quarter?
So we are confident of launching all these projects in this quarter.
Got it. Thanks. That's it from my side. All the best.
Thank you.
Thank you. The next question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, thanks for the opportunity. So my few questions might be repetitive as I joined late. Apologies for that. So first, if you could, just take me through in terms of the new launches, could it be closer to 1,100 odd crores during the quarter?
Shreyans, you're not audible. If you can use the handset, it will be easier for us to understand.
Sure. Am I audible now?
Little better.
Yeah, sure. So just wanted to check on the launches during this quarter. If you could help us, the key projects besides Kiwale, Pimple Nilak and Baner, which is closer to 1,000 odd crores. Is that the right way to look at it?
Sorry, what?
Hello?
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 Sir, you're on mute, I guess.
Oh, okay.
Hello. Sorry, Shreyans, but I could not get through your question.
Am I audible now?
Yes, you're audible. Yes.
Sure. So, sir, just wanted to check on the launches during this quarter, which is closer to 1,100 odd crores. Is that the right number?
So we are talking about around 1,800 crores for this quarter. So around 400 crores of Wagholi launch, around 1,000 crores at Life Republic, and one project at Mumbai and one project at Bangalore. So around.
No, I'm talking about the third quarter launches. How much did we launch during the third quarter?
Okay. So third quarter, so around, in first half, we have launched around 2,000 crores worth projects. So in the third quarter, the rest of the projects got launched. So some part of Kolte, some part of Manor, and some part of Altura got launched in Q3. And couple of, the buildings at Life Republic.
Sure. So secondly, in terms of our margins, if you could help me reconciling those, we were guiding for closer to 1,600 odd crores in terms of top line, and closer to, say, EBITDA margin guidance was closer to 15 to 16 odd %. So if I do a rough math, to achieve that, we'll be requiring closer to 20-25% odd EBITDA margin for the fourth quarter.
Yes. So Shreya, see, since there are, we were assessing that kind of, situation. So some of the OCs we are expecting in the month of March. So for that, maybe a spillover of the revenue recognition for the first quarter of next financial year. And because of that, from 1,600 or 1,700 crores or revenue recognition will be around 1,500 crores. If that happens, then we are expecting a early teens margin. But yes, so some of the low margin projects, the partial of that is getting recognized through the leftover inventory of that project. So there can be a dent. So in terms of, there are low margins projects like Exente, Stargate, G Building, and a couple of projects with a lesser value, which will get recognized in the coming quarter.
Okay, sure. During the year, we've done closer to 4,000 odd crores, and we are guiding for closer to 8,000, 10,000 crores. So are we still, maintaining that number?
So, see, we have done a 4,000 crores worth business development opportunities, and on top of that, we have done multiple land aggregation around the Life Republic. So if we add that, so over there, the potential of that additional land is close to 2,000 crores. So I'm not, even after considering that, we are confident of closing a 3,000 to 4,000 crores worth BD potential. That is what I have answered earlier in this call, in next 3 to 4 months.
Got it. That's it from my side. Thank you and all the best.
Thank you. The next question is from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes, Dhananjay.
Yeah. So what was the amount we paid to this minority stakeholder for this 5% stake in LR?
So we have paid around 60 crores for that, for this minority stakeholder buyout at Life Republic.
Okay. And in terms of launches, you said that till H1 we had 2.73 million square feet launches, and in Q3 we did about close to 1.3 million square feet, right? And 2 million more square feet will be launching in Q4.
Yes.
Okay. Yeah, that is for me.
Thank you. The next question is from the line of Biplab Debabra from Antique Stock Broking. Please go ahead.
Good afternoon. So my question is, you mentioned about some low margin projects and high margin projects. So just wanted to know what would be those EBITDA margins in low margin projects, and what would be those EBITDA margins in high margin projects, around ballpark number.
So see, for the low margins projects, the GPs are in the range of say 25 plus or minus, and if you minus the overheads, then the rest will be the EBITDA margins. Because the project level EBITDA margins are different, and the corporate level, because of this revenue recognition methodology, the EBITDA overheads are different for that specific quarter. So, but GP will be around 25% plus or minus.
For the low margin projects?
Yes.
And for high margin projects, how much GP can go?
See, as I discussed in the earlier calls also, whatever that we are selling in last 2 years, we are confident of achieving a EBITDA margin, EBITDA margin at a project level of around 25 to 27%. So earlier, what I said, 25% of GP margins for this low margin project. And when I'm talking about the EBITDA margins of 27-28%, that is for the last 2 years sales that we have achieved.
Those are high margin projects, right?
Yes. And in the few projects where we are sitting with the historical cost, our EBITDA margins are beyond 30-35% also. At a row house project at LR, our EBITDA margins are beyond 40%. A project level EBITDA margin.
Okay. And my second question is, sir, you are going well, and now I see that you have a huge launch pipeline. In this year itself, in the last quarter, in fourth quarter, you will have 18 billion, 1,800 crore of launch pipeline. And then in next year, FY25, you will have a 7,000 crore of launch pipeline. So, and the kind of offtake that's happening. I know I'm not asking for guidance, but we can, if the offtake is same, absorption rate is same as we saw in FY23 or 24 that we are seeing, then the number would be more than 25% growth in sales booking. I'm asking you this, it would be more than 25%. I don't know why you are giving the growth of 25%. Should it be higher, much higher, since we are launching so much and absorption rate is quite high?
Biplab, so in last financial year, we have launched around 2,100 crore worth inventory. In this year, we are launching 5,000 worth inventory, and next year there is the pipeline of around 7,000 crores. So yes, to answer your question, we are getting a good response across the project, and there can be a numbers possibility beyond 25% of CAGR, but it is too early to comment on that. Once the project gets launched, then certainly we will be in a position to communicate this set of numbers if there is any the positive surprise. And we always have an endeavor to beat the market expectation.
Okay, sir. Thank you, sir. All the best, sir.
Thank you.
Thank you. The next question is from the line of Ronak H from RoboCap. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah. So, do we have any guidance for like FY25 and 26, and for the EBITDA margins level?
So it will be, so our EBITDA margins will be improving gradually for the next few years, not next few years, for the next around next 2 financial year, FY25 and 26, from current early teens to late teens, and from FY27 first quarter or FY26 last quarter onwards, where our the new set of delivery will start begin. So over there, we expect a significant jump in our EBITDA margin beyond 20%.
Okay, and on the revenue front, anything?
So revenue around 16 to 1700 crores for FY25 and similar numbers for FY26.
Okay.
So having said that, so currently we are evaluating a couple of low-rise developments also. So if we able to close those low-rise developments, then certainly the delivery of that can be possible in FY26. So I'm not counting that as we speak.
Okay. Or can you discuss more about the industry scenario, like how the real estate is going on?
Sorry to interrupt, but can you please return to the question queue, as there are several participants waiting?
Okay, sure.
Thank you.
So let me try to answer this since you have asked. So industry, so we track that on a walk-in to conversion ratio. So that is still a constant for us. In fact, in the month of January, February, the decision time was getting increased But very recently, what we have seen, particularly for our premium projects, because you can call it a FOMO effect or what, our decision making is quicker as compared to the past. On top of that, the inventory hangover is very minimal in the geographies where we operate, and particularly for the industry, the affordability is very good from a customer perspective. If you talk about in terms of the EMI to household income, so that is in the range of 35 to 40%, so which is very significant, and we are expecting some relief in terms of the interest rate in the H2 of next year. So if we, if that kind of moves happen, certainly it will be beneficial for the MIG and affordable segment also, which is not contributing, though the industry is achieving a newer and newer benchmarks, on quarter-on-quarter basis, but still the affordable and MIG segment is not contributing that much. So once that starts contributing, then certainly, you will see big jump, quantum jump in the industry size.
Okay, got it. Thanks.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Yeah, hello. Am I audible?
Yes, sir.
Yeah, thank you. Very happy New Year, Rahul, to you and the team. So, Rahul, most of the questions have been answered. Just a couple of clarifications. So you mentioned that to our early participant question that the margins in the project that you've done in the last couple of years are around 25% at EBITDA level at the project level. So from a project to a corporate level, what is the flow through typically? Like what kind of costs are there, and how do you envision that cost going forward in the next 2-3 years as you sort of launch more projects, etc.?
So Rohit, in the CCM methodology, for the better understanding of everyone, in CCM methodology, revenues are back-ended and overheads are front-ended. And particularly, it is a classic problem for a growing company like us, where overheads are more and at the same time it is upfront. And against that, the revenue is getting recognized of the past, and that too at a lower price realization. So it is the problem of this CCM methodology. So there can be a distortion in the margin. But having said that, when I was talking about the low margin project, 3-4 low margin projects, over there the GPs are in the range of say 20% to 25%, and the project level to corporate level. So post GP, it is all about the overhead. So overheads are, if we manage our revenue recognition, if we able to achieve a revenue recognition of around 2,500 to 3,000 crores with the current setup, then certainly these overheads will be a single-digit overheads for us. Since our revenue recognition numbers are lower, these overheads look like a 13-14% for us.
Okay. So if I were to ask in a different way, sir, so assuming there was no there is a revenue recognition issue because of the way the accounting works. But assuming that was not there, today if you were to clock 2,800 crores of sales, what would be your EBITDA margins on a corporate level? And let's ignore the revenue recognition for a minute, just for understanding purposes.
Okay. So I just tried to answer that.
You said that the EBITDA margins at a corporate level would, at a project level, would 25-27%. So around 750 crores of project level EBITDA would be there. Is that correct?
We call it an embedded EBITDA margin. So project level EBITDA margin multiplied by a sale of that sale is coming from whatever the sale is coming from that project, summation of all such projects, and on top of that maybe a 2% reduction at a corporate level. So this number is in the range of 25 to 27%.
Understood. And got it, sir. I understood this. And sir, I think a lot of the other participants have also asked us that given that
Sir,
the
I'm sorry to
Hello.
interrupt. Could you please go back to the question queue as there is a participant waiting?
Okay.
Thank you. The next question is from the line of Chintan Chheda from Quest Investment Advisors Private Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, my question is that given the healthy launch pipeline in Mumbai, which we have shared for FY25, so can you just delve a little bit deeper, like how will this be spread across the year?
Yes. So we have said that around 5 projects will get launched in next financial year in Mumbai. So Vishwakarma and Jal Mangal Dev will get launched in the first half of the next financial year, and likewise Lakshmi Ratan, Jal Nidhi and Nandadham will get launched in the second half of the financial year.
Okay, thank you. That's it from my side.
Thank you. The next question is from the line of Prajwal, an individual investor. Please go ahead. Hello, Mr. Prajwal. Ladies and gentlemen, as Mr. Prajwal is not able to connect, the next question is from the line of Mr. Bharat Seth from Quest Investment Advisors Private Limited. Please go ahead.
Thanks, Arul. My question has been answered. Thank you.
Thank you. The next question is from the line of Jainam Shah from Equirus Securities Private Limited. Please go ahead.
Hi, sir. Am I audible?
Yes, sir.
Yes.
Yes, so this is more regarding the completion method that we are using. So what I remember is that we have changed the completion method as per.
Sorry to interrupt, but you're not very audible.
Yeah, just a minute. Yeah, is this clear now?
Better.
Yeah, so just wanted to understand one thing. In 2017 or 18, we have changed our revenue recognition method as per the Indies from percentage completion to project completion method. But what I remember is that you have been giving the comparative financial statement as per old method as for probably 3 to 4 years time. So is it possible to share on the annual numbers that would clarify more on the margin side?
So since yes, I do agree with your statement. But since our these POCM numbers are, we can create that kind of numbers, and for certain analysis we also try to evaluate from that perspective. But since these numbers are unaudited numbers, we restrict ourselves sharing those numbers in the public domain. But certainly that can be discussed. So we'll take your suggestion on board.
Okay, sir. Thank you so much, sir. That's it for us. Thank you.
Thank you. The next question is from the line of Shreyansh Mehta from Equirus. Please go ahead.
Yeah, thanks for the follow-up. So my question is particularly for Life Republic. So if you see, third quarter realizations, we are closer to 6,500 rupees. It is closer to, say, 25-30% premium to what we were doing, say, around 2 years back. So one, do you feel that this is the peak, or we still have more room going forward? Second, would you like to restrict yourself in terms of building more inventory in LR? Would you like to take more price realizations at the cost of more volumes? How do you look at it?
So see, to answer your question, so this price realization is coming from our MIG product, and which is a cash cow at LR. So barring the only maybe a 200 crore project of, not in this quarter, but that was the only exceptional project, premium row house project. So apart from that, the entire contribution is coming from our mid-segment projects. So and in the next few months, we are planning to launch a luxury project at Life Republic, where the price realization will be beyond 7,000 crores, 7,000 rupees a square feet. And so certainly a blend of both, there will be a betterment in price realization at LR. Not on a quarter-on-quarter basis, as I mentioned earlier. So there can be, depending on which specific project is contributing more, but particularly on a yearly basis, certainly there will be a much improvement in the price realization at Life Republic. And to answer your second part of question, so for us, 1 year a journey of getting the additional volume. The next year is a journey of getting the additional value. So we are continuing with this kind of strategy. So this year, fortunately we got the volumes also while improving our the value on a per square foot basis. So next year our aim will be on a volume at Life Republic.
Okay. Got it. That's clear.
For the next 4 to 5 years, we are aiming to achieve more than around 2 million square feet of pre-sales number at LR.
Sorry, sir, I missed that.
So around 2 million square feet of pre-sales number.
Okay, from LR itself.
From LR itself.
Got it. Sure. And so, second question is, there were market news, that many of the building proposals were put on hold due to water concerns. So, are we seeing any issues out there for any of our projects?
Not actually. So, whatever the projects that are in pipeline, so we have already addressed that kind of concern. So, there is no, constraint for our priority launch portfolio.
Got it. Thank you, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hi, sir. Good afternoon. I believe to one of the early participants, you gave certain revenue guidance for the next 2 years. Can you just please repeat it for just to clear my confusion? I believe you said 1,600 crores in FY25. Is that correct, or did I?
That's correct.
And then moving on, FY26, what are expectations?
So FY26, the similar set of numbers, but having said that, there can be deviations, the positive deviations in that guidance, depending on if we are launching any low-rise developments.
But so let's say FY24 you're saying 1,500 crores, and then you just upping it up by 100 crores, but then your pipeline is so big, so why is such a small jump?
So see, what are the projects, Rahil, that we have sold in last 4 to 6 quarters? The realization of that will start in the month of in the year FY27. So or maybe last quarter of FY26. See, we have to understand the fact that in across Maharashtra particularly, so there is an additional FSI available, and because of the unified DCR, most of our developments are high-rise developments, and high-rise development needs at least 3.5 years of for the completion. And our 24K projects, which are beyond 100 meters, will need at least 3.5 years from a revenue recognition perspective.
Okay, I got it. So FY27 onwards, we can expect a huge jump then.
Yes.
From then on. Yeah, okay. No problem. Thank you and all the best.
Thank you. As there are no further questions from the participant, I hand the conference over to management for closing comments.
Thank you once again for your interest and support. We'll continue to stay engaged, and if you have any further questions, please feel free to reach Dipti Rajput at Kolte Patil Developers. Look forward to interacting with you next quarter. Best wishes for the Republic Day in advance. Thank you.
Thank you. On behalf of Kolte Patil, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.